Imagine being the world's worst investor like this guy that I have on the screen to the right here. Imagine you invested and every time the market crashed directly after, you just threw, we're going to do $2,000. I feel like everybody can kind of afford $2,000. So I feel like that's a reasonable starting point. We're going to go over 1973, 1987, 2000, 2008, and 2020. And I'm going to show you if you invested $2,000 right before those stock market crashes, what that money would be worth today. I think you guys are going to be surprised. All right, let's talk about 1973. We're going to call our investor Bob. Bob invests $2,000 right before the market crash. What went wrong in 1973? Oil crisis, high inflation, recession, and then the market crashes 48.2% because of it. If you just held on and didn't sell, your money would be worth almost $500,000 today with dividends included. A rough estimate, about $460,000 if you reinvested dividends the entire time. And that's without dollar cost averaging. I feel like that's pretty impressive. I hope that drives a point home. It's 33 years of compounding of just $2,000 right before one of the biggest crashes in stock market history. Pretty impressive. All right, let's talk about 1987 Black Monday. We're back with Bob. He invests $2,000 right before the crash. And what went wrong during that time period? Markets are overvalued, portfolio insurance, panic selling, and Black Monday, obviously. Markets fell 22.6% in one day. If you just left that money in there, estimated value today would be $111,000 just with dividends reinvested, no dollar cost averaging. Hope we're starting to hit the point. All right, time for the infamous dot-com crash, the year 2000. Bob's back. Bob's invested $2,000 right before the crash. What went wrong that year? Obviously, the dot-com bubble. Stocks were overvalued and reality set in, and then the inevitable crash. Market tanked 49% in 2 years, down pretty bad period. Estimated value of your $2,000 investment around $14,700 if you just let it ride, let the dividends do its job. All right, now let's talk about 2007, 2008 financial crisis. We got Bob again, $2,000. What went wrong during this time? Housing bubble, financial system failure, panic and collapse. The peak was October 2009, 2007. Market came down 57.7%. Estimated value of that money today, $13,400. Pretty good. Here we go, the most recent 2020 COVID-19 crash, what everybody's so familiar with. We got Bob again, same thing, $2,000 right before the crash. Everybody knows what global pandemic, market panic, massive stimulus, and then obviously we found the bottom. However, the market came down 33.9% during this crash, and your money would be worth estimated $4,500 to $5,000 a day. So more than doubled without even dollar cost averaging if you just got in before the COVID crash. Look at Bob. He's so happy now. He was the worst investor ever. He invested at the worst times, and somehow he still won. If you look at the totals, $10,000 total invested over those 5 periods, and you would have ended up with roughly $605,000. Guys, that's pretty impressive. This video is really meant for the people that are scared to invest in the stock market. As long as you have a long enough time horizon, it generally works out for you. Hopefully you got something out of this video. Thank you.